Excellent. So, just in summary, we know there's a bunch of demand, there's very limited supply. So, and as Ronnie said, we'd love to have you at our community. We really would. The qualitative reason of what I do for why I do it, not just because of the numbers on the screen, but we make a difference in people's lives. We want you to have a great place where you want to live and be, not where someone puts you. We never say that. We say residents come to our community because they want to be here. So whether it's ours or whether it's another community, the goal of today was just to kind of show the sense of urgency that there's not much out there, and any stuff that's new that's coming is going to take a very long time to get here. So with that, I'd certainly be happy to answer any questions, or Ronnie, if they're for Ronnie, our capital team, they can answer, our builder can answer, Jake can answer. So yes, sir.
One of the questions that has been raised recently about among us is the control of price increases for the monthly, once you're in.
Mm-hmm.
Do y'all have a sense about what the percentage might be, and when does it start? In other words, if you start increasing prices that somebody that might move in early next year versus those that are being built, which will probably have to pay more anyway, is that?
Right. No, I understand. So the question is, what about price increases on the monthly service fee, et cetera? When will those come into play? How much will they be? It's impossible to say how much they will be, but I can tell you that they will be in line with market. So, and what I mean by that is if, let's say they would raise, and I'm not saying this is going to happen, but go with inflation and say inflation is 2.5%. Because costs will go up, which is why you have to raise rents. It wouldn't make any sense for us to raise rents by 7% if inflation is 2.5%, because that's going to kill our market. People will not be happy with that, and that's not what we want. As to when rents could go up, I can just give you an idea of our previous community. We did not consider any rent increases until stuff was built out. I'm not saying that's the case here, but it's highly unlikely that we're going to be having rent increases in a community when there's still people coming in the community. So I know that's vague, and I hate that it's that vague, but we can't price ourselves out of the market, nor would we.
What's the timing for the big play center?
The big play center. I like that. Like that. Which we call that the village, with our club building, which is obviously what we all want. From what we can see in the market, and we're in the market every day on the capital markets. That's what I mean by that. When is capital coming? When is capital coming? What we're seeing now is it's end of this year to the first half of next year is when they think capital is going to break loose. So what's happening is on the village project, that's a sizable project. It's a $90-ish million project, which is fine. It's what we've done at Athens, at Ackworth, as well as Forsyth County. The challenge is the way that's capitalized is typically is going to be a loan. Let's around $60 million, and let's call it 100, and there's 40 million of equity. So those equity providers that come in and partner with you, that's institutional equity. Right now in the market, they are still not willing to take development risk. They want to acquire existing properties, but that's going to run out pretty quickly. The other thing that they say is they're waiting for prices to come down or interest rates to come down or whatever. Well, here's the big news flash. Prices are not coming down. It doesn't work that way. When construction prices or commodities or whatever go up, they don't come back down. So that's not going to happen. The question is interest rates. I'm not an economist. I have an opinion. From what we can tell this year, barring a new black swan landing on the pond, is the Fed is anywhere from 0 to 4, with 2 being the most likely of interest rate cuts this year. Construction financing, which is what we do, is based off of that short-term rate. It's a floating rate. And if those go down another 0.5 percentage point, that's going to help unlock some capital too. And most people think that's going to happen. Fortunately, the last this month and the last couple of weeks, CPI was lower than expected. And then the producer price index, which is the wholesale index, that was a little bit lower than expected. So that's good news. What we don't know is, have tariffs, are they going to increase that much? that's such a whipsaw. No one knows what's going on, but so far it hasn't. And those have already kind of been brought down a little bit. So we're hoping that inflation, due to an oversupply of capital in the market, that's gone. Now we're just dealing with exact prices. So that's a whole bunch of word salad, and I apologize for that. We don't know, but what we really think that that capital will come back into the market in the second half of this year or the beginning of 2026. The reason that we want to do this is if you're a capital provider looking to go into the market, would you want to go into a project that's an idea that hasn't started? Or would you want to go into a project that all the horizontal infrastructure is in place, you've got 90 residents in place, and you've got a waiting list of residents that want to go into the apartments? And we firmly believe that it'll be the latter, which is what we are. And so we should be first in, for sure. Did I answer your question? Too much, probably.
You just mentioned a number of units. Is the financing contingent upon X amount of units completion fulfillment?
So we do have, there's two things. I'll answer that in a couple of different ways. We're about 5 units away from a pre-sale requirement. I'll tell you that. We're almost there. We are working on a workaround for that. And our capital providers are aware of that, of you put in more equity up front versus the debt side. But we think we're going to be there in very short order anyway, so it's not a problem. Our loan is approved. Our equity is approved. We're just in the closing process right now with the documents, the paperwork. We're dealing with one thing with Oconee County on a sewer line downstream. But outside of that, we're ready to go.
You said the loan is approved. The loan is approved for what? What dollar for the entire project?
Yes, the loan's approved for the bungalow project. So this loan, this capital raise that we're doing right now, will do all the horizontal infrastructure. We'll build all 96 bungalows, and we'll build the outdoor amenities. So the pickleball court, the pool, the spa building, all of that. The next round will be when we're able to capitalize, what you call it, the fun house? The fun house, the big house up the road. Yeah. Yeah. The club building, the bar. Exactly. But until that's done, that spa building is going to serve as that building. So we'll have a concierge person that will be in that building during normal business hours. That will be the activity hub outside of your homes and the bungalows. Yeah. Yes, ma'am.
Question, this might be for the builder. So we're going to be moving in May, but clearly there's going to be a lot of building going on after that. And I just wondered if there's a plan in place to mitigate things like construction noise and that, trucks going by your bungalows.
Sure.
Whatever.
Yeah, absolutely. Best practices. And so we're going to be doing this in phases, working from front at this side, if you will, to back. And so will there be construction traffic? Of course, because it just is. But and it's better to look at the map, but as we do stuff in certain, we're trying to do this row, then this row, then this row, so that there's not houses going up all over the place, because that's just, it's unorganized, and yes, it leads to more traffic and noise. So yes, we do have a plan in place. Yeah. Yes, sir.
I don't know your. Could you talk a little bit about projects, the sizes, projects you've already done?
Sure. It's a good idea. So what we've already accomplished is we have built 2 senior housing communities that we've successfully exited. So one was in Ackworth, Georgia, over in Cobb County. The other one, which was our first full campus model, is in Forsyth County. We have completed and sold out of both of those. We did a retail center in front of the Forsyth building. We did cottages over there as well. All in all, that was about $250 million worth of real estate that we're able to do. I've been in commercial real estate for over 35 years. And over my career, I don't know the exact number, but it's probably close to $700-800 million worth of real estate that I've built and capitalized and done myself. I know our partners have also done quite a bit. A lot of y'all know Armand. Armin is with a company called Jacoby Development. They were the group that developed Atlantic Station, as well as the Porsche building down by the airport. So we are a very, very experienced team